Hello and welcome to another update video about Doge. Yeah, Doge chart reacted, or the Doge chart reacted here to the resistance area we talked about in the last video, and it completed the wave pattern. At least visually, we have enough waves in place to the downside to consider this move down now complete as a pretty healthy A, B, C structure. So we have 3 waves down, and then this means it is entirely possible that from this region somewhere, now a 3rd wave rally to the upside would start. Yeah, so we had this strong sell-off, and to the 3rd of February low, we all know about it. The market rallied, and since then we've been in this boring sideways range across the sector. And let's be honest, the micro patterns that we see on various charts, they don't really differ much from each other. They don't really differ much from each other. They all look the same. So it's pretty boring at the moment. But we are tracking the micro patterns because of that, because there's some movement there, there's some volatility. And if we see the markets reach certain pivots, then we can point that out, because these are the areas where we have to be watching. So just purely based on the wave pattern, it is absolutely plausible to expect a bullish outcome here. It's not a super high probability, I have to say that as well, because the rally is in 3 waves only. I'm talking about the rally from the 3rd of February low to the 3rd of February high, essentially. That happened within 20 hours, that recovery, and it was quite a substantial recovery, but it was not an impulse. Had it been an impulse, then this would be a pretty clear, we would have pretty clear probabilities. By the way, if you want to learn what an impulse is, check out the video I'm going to link now, because it links to a tutorial on our main channel, MCO Global, in which I talk about impulses and why they are so important. So I will explain there why I always talk about impulses. They are very important patterns. And if we don't see an impulse, it's just not very clear. But again, we have a rally, and the pullback is also in a corrective structure. And by the way, I will make another tutorial soon about corrections, so that might help you as well. My goal is that everybody can understand here the analysis, at least understand it. To apply it takes a lot of time to learn that, but yeah, MCO is all about empowerment and to help you learn. So we have in this decline, so one way of calculating a target for a C wave is we take the length of the A wave, and then we project that out, okay, to get to a C wave. And the C wave target is usually the 100% extension, at least the first ideal target. And guess what? We've actually reached that. There was some confluence here between 23 cents and 24 cents. 2 main Fibonacci levels, a 61.8 retracement and 100% extension, 2 key levels. And yep, there's been the expected bounce. The question is now, can we actually move higher now and start the 3rd wave? Probably not much is going to happen over the weekend. But as you can see, and I have to shift this back into place when we go to the more detailed wave counts, it always moves a bit. This looks like a tiny 5-wave move up, but it's just too small to be reliable. So what I will do, I will shift this resistance area to the right, because essentially we need a break above this resistance zone, which would be the wave 4 high, for an early indication that a low of sorts is in place. And then we'll probably see the market attack the green line located at 29.3 cents. That's the next best indication that a low is formed. And then if we also see a break above the upper green line at 34.2 cents, that's even more evidence. But for now, we are still stuck in this local range. And there is some promising price action from the low. It's just too small. It is just too small, unfortunately. Yeah. So what we need to do then is, first of all, pay attention to the recent low. Does the market hold above it? It would be preferred. Ideally, yes. Even if it goes lower, I mean, it wouldn't be a problem necessarily from a bullish point of view, because the market could theoretically stretch out all the way to 22 cents. That's the 78.6 retracement. Ideally, the market holds above that level. Okay, if not, then the invalidation point is at 20.4 cents. But 22 cents is main support. Below that level, we're entering no man's land, and lower is going to become very probable. Yeah. So we have 24 cents, which is the last low, and 22 cents as main support levels now. And to the upside, we want to see a break above, first of all, 26.2 cents, then 29.3 cents for further evidence. And then in the course, or over the course of the following weeks, ideally, we should see the market move towards the 60-cent area, but we are far away from that. So this is at the moment a potential which needs to be proven. Yeah, the market needs to give us some more evidence that a low is in. This is at the moment, as I said, a potential. It's not yet running. This is not unfolding yet. Okay, that's the update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure you follow us on the main channel. Subscribe now. The link is in the description. You can do that for free. Today, I also made a video about Ethereum to talk a little bit about the Bybit hack, but it's more about understanding how the market is impacted by such events and what's the long-term outlook for Ethereum. Thank you. Bye-bye.